Hello everyone. Today's topic is SMC, that is, Market Structure and Liquidity Inducement Theory. We will review these in detail. Alright then, so why exactly do we need SMC? For confirmation and entry. I'll try to cover this topic a bit quicker and more clearly, because there is no need to drag it out. Okay, before this we got acquainted with Malaysia SNR. It's all just K level. We finished Malaysia SNR. We've almost finished, but we still have things to learn. I will teach them gradually in the next topics. Okay, now we've come to SMC. We will learn the market structure, and then we will learn to work with the ICT key zone, and then CRT, and then risk management and psychology. We will get acquainted with these. Before the market structure, the market goes from the external range liquidity, to the internal range liquidity. We need to understand this. The market always takes the internal range liquidity and moves to the external range liquidity. That is, this internal range is liquidity inducement. They might also refer to it as an inducement, or the market moves from the K levels, SNR K levels, and moves towards the external range liquidity. It doesn't matter if the market structure is sell or buy. Where is the market turning from? The maximum or the minimum? These will always be external range liquidity for us. That is, as you can see, at this point the market structure has been broken down. That is, it can be internal range liquidity, an FVG, or an inducement. Let's take it as an FVG, for example, or some SNR K level. Internal range liquidity. After consuming the internal range liquidity, the market's movement will be toward the external range liquidity. After consuming the external range liquidity, the market moves to the internal range liquidity again. That is, it moves from internal range liquidity to external range liquidity, and from external range liquidity to internal range liquidity. It's the same in this buy. The market has given structure, given confirmation, and the market is continuing on its path. And the market has returned, left a new maximum. Whether it's an FVG or an inducement, once that level has been taken, the market will then begin to move toward the external range liquidity. And here, many people also, there can be SNR K levels right here, after the market takes the inducement. While the market is continuing on its way, many people will enter from these zones and get stopped out. That's why you need to know this. It takes the inducement and moves to the external range liquidity. Our take profit will always be at the external range liquidity. As for the market structure, market structure is buy. The trend is buy or sell. How do we know this? Okay, the market is in a sell. The market is moving in a sell. The trend is sell. And a breakout happens. A liquidity sweep occurs. And breakout. Again, the market continues on the same path. If we take the external range liquidity here, the trend is in a sell. If it's in a sell, it's going lower low, lower high, lower low. Lower high, lower low, lower high, lower low, and higher high. That is, the structure is breaking here, and the trend has changed to a buy. This hasn't changed to buy yet. If there's a second breakout, it will change to buy. Okay. Second breakout. Okay, the structure has changed. Higher high, higher low, higher high, higher low, higher high. Higher low, higher high, higher low, higher high, lower low. The structure was broken again. Lower high, lower low. Breakout. Liquidity sweep. Okay. And the market continues on its path. This will also turn into external range liquidity as well. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We don't really use this. I'm just showing it so you can understand the market structure. Our way of getting confirmation will be completely different. I mean, regarding the SMC strategy that's spread on social media based on this concept, I don't know, how should I put it? I do not teach the systems that are shown on social media, or the ones those 1 or 2 traders are currently teaching. Okay. Take a look. We learned the market structure. So there's a higher high, higher low, higher high, higher low, a liquidity sweep, a breakout, and the market trend changes. Okay, inducement. What is inducement? Okay, we'll also look at the inducement now. The market direction is currently in a sell, and the overall trend is sell. Lower low, lower high, lower low, lower high, lower low. Lower high, lower low, higher high, lower low, higher high.